Well, welcome everybody. I want to welcome everybody that's on the webinar today. And today we have two really credible and experienced consultants who's going to share some really hands-on experience and working things that you can do to help you craft a practice and build a better plan. And it's one of the things I think practices don't spend enough time on and end up doing a lot of backtracking later on. So in order for us to avoid some of those pitfalls before they happen, I have a couple of consultants with me today. And um, the first consultant I'm going to go ahead and introduce. I'll go ahead and introduce Shannon Blackman. She is a certified financial planner and registered life planner, and she specializes in guiding dentists through transitions such as purchasing a practice, selling a practice, and pretty much everything in between. And as a senior portfolio advisor at Thomas Dahl, she has over 10 years of experience in comprehensive wealth management with really a focus on serving the unique needs of dentists and physicians for the past 5 years. And I think we all know that physicians and dentists have unique characteristics and features in their business and even in their personals. So, and Thomas Dahl is, as you guys probably already know, is very well known for its dedication to these professional entrepreneurs. And they're definitely part of the Academy of Dental CPA. So I'd like to welcome Shannon. And then the other consultant we have on with us is going to be Joanne Tanner. And Joanne Tanner is the owner of Tanner Management and Practice Management. She is a acquisition expert, but I think beyond all of that, I've known Joanne for the better part of 20 years or more, and as a consultant in dental practices. Um, I have referred her a number of clients, and I trust her with my clients mainly because she has a certain amount of hands-on experience, but I think she's willing uh, to be honest with practices, right? When there's problems, she doesn't sugarcoat things. Um, I think her experience in the military kind of serves that. She's going to tell you what she thinks and what's going to work and what's not. And she's also had a ton of frontline experience. She's actually worked in practice before she became a consultant. So she can empathize with staff and understand what they're going through. So when she does staff training and such, she speaks like one of them. She can speak as a being in a practice because she has, right? And she's got a tremendous amount of experience in terms of financials and transitioning, which is where she's focuses on today. So I'd like to welcome both of our consultants today.
Well, thank you, Bill. And Bill himself, Bill Fakui, has been in the dental marketing industry for nearly 30 years, and he's focused exclusively on internet marketing for 25 of them. He was a pioneer in SEO while Google was still in beta. He also has a strong understanding and appreciation for the business of dentistry, and that's why he's helping us host these practice management webinars. So thank you so much, Bill.
You're welcome. I'm just old, that's all.
No. And I've got to say, I am so pleased to be presenting with Joanne Tanner today because Thomas Dahl and Tanner Management have so many clients together, and I'm always so impressed by how our two services help dentists succeed. Us working on the financials and Joanne working in the dental practices themselves and understanding how to optimize efficiencies there. So we only have about an hour to cover a huge topic. So this is going to be an overview of what's important when crafting a dental practice business plan. So we're going to go over the roadmap to financial freedom. We'll discuss 5 of the common prosperity obstacles faced by dentists. And finally, the 3 crucial things for cultivating a prosperity mindset in dentistry. So Stephen Covey, this is his second habit for highly successful people. It's to begin with the end in mind. We want to envision where we're going and then take the steps to get there. because the path becomes clear when we know where we're going, right? So I'd like to show you this associate roadmap. So this is just showing you the steps to go from being an associate to finally achieving financial autonomy. So at the very beginning, for the first 1 to 3 years, you need to work as an associate to gain your clinical proficiency and to get your production levels up, right? And so during this time frame, it's important financially to keep your credit scores high and to have 50,000 to 100,000 set aside just to show the banks that you're good with money. You're probably going to get a zero down practice loan, but this shows them that you're competent with money. And during this time, keep your student loan payments low. That way, the banks are going to see that you have less expenses to cover when you're getting the financing for the practice. And then later on, you can see in the curve, you'll pay down your student loans. Once your practice is up and running, then you can refinance and set up an aggressive payment schedule. And the next stage is finding the best practice for you. So this is location, location, location. Where do you want to be? What size practice do you want to have? How much do you need to earn in profit to stay above water? And does the seller's treatment philosophy match your own? Now, once you've identified a few practices that might fit, it's important to do a comparison analysis and identify the practice that's really going to be the best fit for you. It's key for you as a buyer to identify the dentistry that's being performed, make sure you can replicate everything the seller's doing, and maybe you can even bring in additional dentistry. Maybe it's an older dentist who's winding down, they only do bread and butter dentistry, and you can bring in perio, Invisalign, pedo. You'll work with a healthcare attorney, you'll submit a letter of intent, and then you'll have some timeframes identified for how long you'll have for your due diligence, when you're planning on closing, and all those other key dates related to the deal. So you're essentially buying a machine that generates cash flow. So it's our job as dental CPAs and dental CFPs to make sure that we have a very solid cash flow projection built for you. And we focus on the cash flow after debt service, so after loan payments. We build out a projection on what you can expect to clear, given that you may have very different expenses than the seller does, right? Your overhead may be different, for instance, and we have to factor in Delta Dental. If the seller is getting premier reimbursements, but you're not premier, that means even if you do exactly what they did, you'll be bringing home less. So I'm not saying don't buy a practice with Delta Dental. I'm not saying that at all. I just want to say that we need to account for that. So we do complete financial due diligence, and then Joanne comes in and does the practice management due diligence. And so here's a pro tip. If you can, buy your practice first and then buy a house. And that's because it's easier to find a house close to your practice than trying to find the ideal practice that just happens to be close to your home. And I've spoken to all the lenders, and they look at your monthly obligations when they're underwriting the practice loan. So if you've got expensive car payments and a gigantic mortgage payments, which is easy to do in the Bay Area, right? They take that into account. So, and also as a practice owner, you're likely going to qualify for better rates and get special financing deals when you buy your house. So there's 3 stages here. The first one is financial security. So this is you're achieving stability in your finances. You got your basic needs covered. You're not worrying all the time anymore. You're starting to save for short-term goals, and you've paid off your high interest credit card debt. You've got an emergency fund, basic insurance. Now, financial freedom is the next stage. This is where you've accumulated enough wealth and passive income to support your lifestyle. Now you're working on paying off lower interest rate debt like mortgage, and you're building a substantial investment portfolio. And you're finally enjoying that promised flexibility and freedom from traditional employment. Your practice starts giving you time now, not just money. And now, not everybody gets here, but the ultimate goal is financial autonomy. This is attaining complete financial independence and self-sufficiency. You're mastering financial decisions, you have full control over your wealth, and you're using resources to make a positive impact and leave a lasting legacy. So, how do you get from financial freedom to financial autonomy? It's living within your means. So, keep your expenses low. Resist the urge to let your lifestyle creep up with your income until you've built a solid practice. So in my work, I get to speak with successful dentists every day. And when I'm looking at their net worth and everything, I always like to pause and ask them, like, what's your secret? And guess what? 9 out of 10 times, there's no secret. There is no secret. They started early. They worked hard. They listened to good advice. They maximize their savings, minimize their taxes, and most importantly, they lived within their means at every stage of their career. So now let's meet my friend Sam, Dr. Sam. So Dr. Sam is an associate. He's assigned all the difficult patients. He wants to do other procedures than the owner doctor will allow him to do. He wants to innovate and use this amazing new technology. And he gets paid well. So being an associate, he's getting paid 30% of production, which is great. So you can make good money being an associate. So don't get me wrong. And like I said, you should be an associate for those 1 to 3 years as you get your clinical side down, you work up in your production. But then don't wait. You likely have student loans, and the best way to pay them off is to own a dental practice and earn more. Oh, also, Dr. Sam, he wants to decide his own schedule. He gets paid well, but he doesn't get to decide how much he can work, right? So he would like to decide that. So at Thomas Dahl, we have lots and lots of dental clients. So we took the data from 300 of our dental clients. We scrubbed all their profit margins, pulled the data, and our average practice owner in the Bay Area had a profit margin of around 35%. So that's 35% versus 30%. Now, not only do you get 35% of your own production, but as an owner, you get the profit from hygiene. So let's say you have $1 million in collections. So that could be 300,000 from the hygiene department alone. Also, you get the practice. You're building an asset that you can sell. So a private practice sale is valued roughly at 75% of collections. And remember, your practice loans will be paid off in full in 10 years. So for $1 million practice, that's $750,000 before taxes. Now, if you're selling to a DSO, that's a whole other conversation. But just think about how much that practice could be worth if you optimize it. You can also own your own building. This means you're paying rent to yourself over your whole career and building equity. Plus retirement plan contributions. So let's say you're an associate, you have a 401k plan, and you can defer $23,000 per year into it. And let's say that ends up being $1 to $2 million by the time you're 65. Well, that's great, but $1 million isn't quite what it used to be anymore. And if you're used to spending, let's say $200,000 a year, I'm sorry, but you're not going to be able to retire on $1 million. But if you're an owner, you can sock away $69,000 per year with your employee deferral, your employer contributions, and profit sharings. So that's more like $5 million by 65. And that's more like it. Plus tax write-offs, cell phone, internet, any meal that you're having where there's a business discussion. So if you're reviewing your patient calendar while you're at lunch, that's a write-off. And there's more tax strategies that I'll share in a little bit. So ultimately, as a practice owner, You have control over your path to financial freedom and autonomy. And that's why people choose entrepreneurship. Brian Hanks says, ownership of the income stream of a dental practice continues to be the most financially lucrative career choice in dentistry. So let me be clear, I'm saying it's worth it, not that it's easy. So there's 5 areas that I hear my dental clients finding challenges in. And the first one seems to be hiring and retaining staff. Wages have gone up since 2020, and there's simply less qualified candidates available in the hiring pool. The second issue is no clear plan or direction for the business. And this shows up as a symptom of creating your lifestyle before you've made a plan and not having a clear exit strategy. So, did you know that dentists retire 7 years later than the average American? And why is that? So sure, I meet so many dentists that love what they do, but I've also seen practices slowly just wither away because the dentist didn't have a clear exit strategy, maybe even going into their 70s, right? Also, no financial plan. These folks are having a great time here. But the symptoms of no financial plan are putting off savings, making bad investments, getting behind on taxes, tax surprises, letting student debt linger for too long and getting overwhelmed with other debt. And also listening to free advice. My pet peeve is insurance agents on TikTok. And then lack of work-life balance. And this is the thing that I see so much. And it kind of goes in with not having a financial plan, because you end up feeling like a rat on a wheel, just trying to keep up with your lifestyle by working harder and harder and harder. It's all financial stress, right? And it affects health. If you're living paycheck to paycheck or payroll to payroll, you're not alone. In fact, 42% of top earners report living paycheck to paycheck. And that includes 36% of those earning more than $250,000 a year. And, we know that financial stress negatively impacts our health. It's linked to heart disease, diabetes, migraines, insomnia, depression, and more. Our relationships also suffer from financial stress, with 4 out of 10 divorces being because of money friction. And ultimately, dentistry is a physically demanding job. One of my dental friends talks about, being like an upside down mechanic, working in a tiny little dark hole, very physically demanding. All of these pressures contribute to burnout. But don't let burnout scorch the value of your dental practice. Now, why is this? Why do these issues come up? Well, first of all, there's very little practice management taught in dental school. And personal finance isn't taught enough. Then you're wearing so many hats. On top of being an excellent clinician, you're a business owner, HR director, parent, husband and wife. That's overwhelming. And finally, the trap of comparison, keeping up with the Joneses, or feeling like, well, because I'm a doctor, I deserve to live here, I deserve to drive this, right? And that lifestyle creep that we talk about. So there's 3 areas that provide a framework for understanding these challenges and finding solutions. One is finding work-life balance. The other is self-leadership. And finally, what I like to call financial flossing. So when it comes to work-life balance, we're back to beginning with the end in mind. There's a lot of flexibility for dental entrepreneurs. So we need to rethink what retirement is. Instead of it being just some fuzzy goal at the end of working, think of it as that point at which work becomes optional. So this isn't just an endpoint goal, because we can build flexibility and financial freedom into your plan sooner. Maybe we can figure out on how you can live on less income and hire an associate, but have more time with your family. Or you could sell your practice, and work back and be the associate? Or do you want to keep the practice? Do you want to build a practice that runs without you even being there? And you don't have to sell because it's creating a steady stream of lifetime income. This is building an investment grade practice. And in today's season of consolidation, this might look like an arrangement with a group practice and private equity partners. Are there pivots that you can consider to make more money and make dentistry more fulfilling? Using technology like Invisalign, intraoral scanners. Specialization is really key right now. Going back and getting that specialization. Maybe you go into sleep apnea or investigate holistic dentistry or do tongue ties. And what transitions can you think about that would expand your empire, going into multiple locations or partnerships and groups? I mean, DSOs didn't invent group dentistry. There's ways to collaborate. So I have a client. We'll call her Dr. Kathy. She's 55 years old. She's in a very successful dental partnership. And she came to us and she said, I need to conserve my body. So we built out a transition timetable so that she'd have no more than 3 working days a week in 2024. We went back for the past 5 years, matching production collections with the number of days to determine what 3 days a week would look like for her, right? And because another doctor is going to need to fill in those days of the week that she's no longer working. And it came the question, how are we going to afford it? Can we afford it? Can we drop her income for 5 years and still meet her retirement goals? Is it worth it? And for Dr. Kathy, it is. It is worth it. So her next stage is to look for candidates, find out what associates are asking for, determine an appropriate compensation structure. She's going to coordinate with her practice management consultant and her business partner. So this is an example of how to make that freedom come earlier at an earlier point instead of just retirement. So yes, we need to become self-aware leaders, investing in ourselves and living by our values, and ultimately modeling that work-life balance. So we talked earlier about the challenges in attaining and retaining well-qualified staff. And dentists everywhere are grappling with the same issue because we're going through a nationwide healthcare worker burnout crisis. Right? Now, at some point as a business leader, you're going to experience losing a great staff member or not being able to attract the right talent. But the secret to overcoming this isn't about, just superficial perks or long or short-term solutions, but in cultivating an empowering culture. So one solution that we have is the Doctor's 401k. This is a way to secure your financial future, save on taxes, and it's also a very valuable benefit for the staff. And what we do, in fact, next week I'm going to Palo Alto to do a great presentation for the entire team. We go and do financial education for the teams, showing them their options and also explaining key financial planning concepts. And this is so important. This is so important. What I see a lot of times is that the benefits value hasn't really been clarified to the team. But if we go there and we explain to them what a wonderful benefit this is, that raises the value of their position. And even when you're posting to attract talent, actually put the value of the plan inside the job description so that they know that on top of their salary, on top of their daily rate, they're also receiving profit sharing maybe and safe harbor match and what that really means to them. That's part of their compensation. So also financial flossing. So I like to call it just like flossing, we need to develop healthy habits for our finances. And so this is, having a great emergency cash reserve. This 3 to 6 months of living expenses in your personal savings. And right now we're enjoying a really great high savings rate. If you want a high yield savings account earning 5%, let me know. No fees to that, just a benefit. And also 2 months of reserves, or 2 months of your business expenses in your practice reserves as well. We really want to have that solid foundation because that keeps you debt free, right? So pay yourself first, automate your savings and investing, keep a budget. Knowing how much you spend is the key number in running these long-term projections, because that's the number that we have to inflate over time. So it's important to know what you spend and keep that lifestyle creep from taking over. And then finally, tax strategies. So there's so many things you can do as an owner. You can rent your home to your corporation. This is called the Augusta Rule. And so this is up for up to 14 days a year by holding corporate meetings in your home. You can employ your spouse and have your spouse be contributing to a 401k alongside you. You can employ your children. Now, this shifts your income to a lower tax bracket, and they can use the money to fund their own 529 plans or custodial Roth IRA accounts. And then please max fund your 401k profit sharing plan. This is up to $69,000 in 2024. Plus, if you're 50 or over, you get the catch up. So that's $76,500. And then finally, a defined benefit retirement plan. So I like these. So the 401k is defined contribution. They're saying, okay, you could put in, $69,000 a year, and we'll see what it grows to. Now, defined benefit flips it, and they have a total benefit, and we use actuaries to do the calculations of how much you can put in each year. Oh, and health savings accounts are great as well. So these are some ways to save for retirement, but I really want to focus in on this defined benefit plan. This is great for folks in their mid to late careers if you either haven't quite saved enough or you're willing to save more in order to lower your tax bills. Now, a really cool example of this is Dr. Sylvia. So Dr. Sylvia is a general dentist. We met her in 2019. And she was selling her practice the very next year. And she was arranging to work back for about 3 to 5 more years. So we knew when she sold her practice that this would be a big capital gains event. And we wanted to plan for it. She was already, funding her 401k, but, that is limited to, $60,000, $70,000 a year, right? We needed a bigger contribution to offset that. Well, we worked with the actuaries, and she was able to fund $690,000 in 2020. And then, going forward, smaller amounts. Her practice sold for $2 million. And this strategy saved Dr. Sylvia over $250,000 in taxes on the sale of her practice. So we only had a couple years to work with her to get this strategy implemented, but think of what you could do if you had even more time to plan this. So this is a huge, huge tax saving opportunity. Now, not all clients are like Dr. Sylvia. So this is Dr. Steve. And Dr. Steve is just a really, really sweet, loving person. And he came to us with this question: can I rely on my retirement savings and the sale of my practice to retire? He didn't have a plan, but he wanted to be certain that he could retire comfortably. He wanted more family time, new experiences, and he wanted to retire in 5 years. So we did a comprehensive financial assessment. We looked at his goals, his expenses, his assets, his savings. We did a Monte Carlo simulation. We looked at the value of his practice, and he was coming up a little short. And this happens, right? This happens. And so his options are to spend less, and his wife was not interested in that. Work longer, he was not interested in that. And the final option that we have is to save more. So we analyzed his practice income statement. We set new production goals because the options are, oops, because the options for saving more, we have to go back to remember my cash generating machine? We need to go back to that machine and see what we can do to create the cash that he needs to save more for his retirement. So Joanne is going to tell us in a minute what that's all about. But I just want to finish by saying 5 years from retirement, there's action steps you need to take. You need a planning meeting with your dental CPA, CFP. We need to stress test your investment portfolio and your other investments. Please do the maximum retirement contributions. Add your spouse to payroll and your 401k to maximize savings. And let's see if a defined benefit plan will work for you.
Thank you, Shannon. What an outstanding presentation. And I really enjoyed your terminology on the financial flossing. You know, of course, we all know about good oral hygiene, and I have never heard about that. Bill, if you can, there we go. I've never heard that terminology before, so that was beautiful. So when Shannon and her team are working with a dentist to get to that financial security, that financial autonomy, they frequently look at the practice to say, how can we generate more income? And more importantly, controlling the expenses, so therefore you can retire at a good space. So I'm going to share some strategies, doctors, on how you can grow your practice. First of all, what not to do is to go into the team and says, you will do it this way. As Bill mentioned, I served in the military as a Navy dental assistant for many years. And there, sure, it works. Yes, sir. However, in our team, we need to understand, why does this need to be done? As Shannon mentioned, begin with the end in mind. Getting the team to see what we're doing now isn't working because they think it is, then they're not going to change. So I'll talk in a little bit about the importance of team meetings. Do you have a way to track pending treatment? The unscheduled treatment report, just even for a 3 to 6 months time frame, tells me so much about the front office as well as the doctor's case acceptance. I'm also going to share some ideas about maximizing your patient retention. As Bill mentioned, he's worked with many of my clients for years on bringing new patients in the door. Well, it's great. However, we want to keep the patients in the practice. And so we want to retain them as long as we can. And then when I work with practices, like Shannon was saying, doing an evaluation of all the management systems are important, so you know what's going on, so you just don't go from here to there, having a plan to grow the practice. So I mentioned the importance of having a team meeting, because there's one thing about change. It's going to be constant, and that constant is change. So we can't keep doing what we're doing because we're going to get what we've got. I think back to when I started first dental assisting. If there was too much mercury in the amalgam, not to worry, we would wring it out with a squeeze cloth, and we weren't wearing gloves back in 1977. So we need to think back. We didn't have computers then. So how we run the business today, how we talk with our patients today, we need to change. We can't keep doing what we were doing in the 70s, 80s, or as recently as the 90s. So again, the ways to not approach the team is just say, you know, I was reading this article, I watched this wonderful webinar, and I've got these great ideas, and I think we need to do this, this, and this. That might work for 2 days, but long-term, that's not going to be attainable and achievable. We all have to understand where we're going, like Shannon said, with the end in mind. So learning to lead, and doctor, we can help you with that, and we can coach you and your team on understanding the process. It's critical. So we now want to contribute more to our retirement plan. We said, Shannon, I want that 5 million. What do we do? So if you have 1.5 million of pending treatment plans in your unscheduled list, all right, it might be a little inflated because it has the referred out to the OS, has a few root canals that are referred out there. But there's at least 1 million, I'm still not gonna get all those patients to say yes, but if there's at least 2, 3, maybe $400,000 more a year, you can then easily contribute that 69,000 that Shan was mentioning. So when you go back to the office, ask your team. So I'm curious, when a patient leaves without an appointment, how are we tracking that? Back in the day, we put it on a sticky note. It still makes me nervous to think, no wonder how, we weren't doing things right. And when you talk to patients about treatment, we have some excellent verbal skills to understand what's important to the patient. Just don't talk at the patient. I remember one time I went to an office that they said they're getting a lot of new patients in the door, but they couldn't figure out why the practice production was actually dropping, not even plateaued, because I watched the doctor. And when he went into the room, he already had his mask on, his loops on, head dressed, and he's in the patient's mouth. There was no eye to eye, there's no relationship. So it's about the heartfelt communication, and that's critical in the case acceptance. And when I talk about payment options, I'm not talking the bank of Dr. Tanner. We're talking about payment options that are non-recourse to the practice, that gives the patient a chance to say yes to the best. So go back to your team and find out what are our options, and you can call me to find out, and we don't take a penny from those companies. But if it makes you successful, it's all that matters. And the patients are doing the dentistry that they need to have done now. If they wait 6, 12 plus months, it's only going to get worse. And it's only going to cost more. So when we do our assessment with the practices, I said, doctor, of the hygiene patients seen, well, you have a full-time hygienist, you see 30, 40 patients, hygiene patients a week. What percentage of them leave at their next hygiene visit? So I would think most of them do, as most of my doctors say that. Everybody, oh, I'm sure 90+%. When we run an analysis on the hygiene reappointment rate, it was 32%. This is a true story, our client in San Francisco. And when they realized that, they said, how is that possible? Well, you know, Joanne, we couldn't find a hygienist after COVID, so we had a couple of temps. Well, the temps didn't know how to do that. They didn't know why to do that. And it should have been handed off to the front office. So creating awareness, and they were up to 78%. They still have room for improvement, but they had to create the awareness to be able to make it grow and get better. So back here before COVID, they weren't doing very well, 40%. I'm proud to say in February, they were at 78, and they are on a positive upward traction graph, which is really fun and rewarding. And again, doctors, it's not about the money. It's about great dentistry for the patients. So when the patient does need treatment, it's so important to have an organized approach. If you show the patient this treatment plan, by the way, it's in Greek. I know what it means, and the dentist and the office manager, the patient looks at this and then they're seeing all the fees, the insurance, and if they take it home and their spouse says, what, $5,000? We can't do $5,000, so they do nothing. And what could have fixed this tooth that needed a crown and they needed the buildup, then it ends up breaking. They needed to deal with the current, so they did nothing because they said, I don't have 5,000. So when presenting payment plans to the patients, we like to show the patient, if they pre-appoint or pay in full prior to beginning treatment, not for an insurance patient, for the cash patients, so they could save over $300. They could even earn a few miles. You give them a bookkeeping courtesy. Doctors notice, I did not call it a discount. You didn't go to discount dental school. You don't do discount dentistry, but it's a bookkeeping courtesy or accounting reduction, because if I collect one time, they're going to show up. If I collect one time, that's less work for me every time they do show up, and no statements to send. Or you might be offering a 6 months no interest payment plan upon approved credit. This is not the bank of Dr. Jones. So the patient sees, oh, $1,000 a month, that's $250 a week. We might be able to do that. Or they might be able to look at a $182 per month payment. In fact, I have a great story about that, because this mother was coming in for an exam and her daughter was getting married in the fall, and she really wanted to have her teeth whitened and lightened and maybe a couple of veneers, and she didn't know what to do. Well, if you have the lower monthly payment, again, this is a financial partner, and there's no prepayment penalty, so they're expecting a tax refund from Thomas Dole, or maybe a year-end bonus, she can have that beautiful smile by the time the wedding comes in. So as Shannon mentioned, I work closely with all the CPAs because they want to help you maximize your financial freedom. And it's a great story because I remember my client calling and she said, my CPA said my wages are too high, Joanne, but who do I let go? So I met with her and we looked at the schedule and I said, actually, I think we could do something with the current team. Well, no, he said my wages are already too high. But I said, doctor, you do have all this pending treatment, right? We have patients that need to come in. And if we, rather than what I showed you in that first column, it was linear, only out of one column, because that other assistant was floating, helping the front, helping the back. If you use 2 columns and schedule doctor and assistant time, we actually increase the production. I said, actually, you need to hire that second one full time because we're going to keep you busy all day and not have that downtime. So it's a lot about successful scheduling, understanding doctor time and assistant time. So those of you that are closer to retirement and you're thinking, what do I need to do? We need to have a plan. You need to have a structured plan starting at least 2, sometimes 3 years before you want to retire, as Shannon was sharing about her client. Because we need to get an idea about a PPO wizard, how many patients are within each insurance plan, because as we mentioned earlier, the Delta fees will drop for the buyer, and that's going to affect your value that you're going to get on the practice. This next one, it's screaming loudly at me because I have a doctor right now, he's looking at buying a practice. 2 locations, only buying 1. The profit loss is not clean. So he cannot really tell what he's getting, what that clear overhead is going to be. The bank's not liking it. So sellers, that's important if you have more than 1 location. Buyers that are listening, we need to make sure that those profit loss are accurate because you need to make sure you understand what is the true overhead. Accounts receivables. I remember one of my first times lecturing at the dental schools in San Francisco 20 plus years ago. He says, Miss Tanner, I have a question. What's accounts receivables? Well, doctors, hopefully most of you know, but just in case, that is when you're playing banker. You do dentistry and they get the dentistry today and you wait on the insurance, that's accounts receivables. And sometimes you're waiting for the patient to pay 2, 3, 4, and 5 months. But sometimes within the accounts receivables, we have what's called accounts receivable credits. Maybe the patient is prepaid. So sellers, if you've had a patient prepay and the buyer is going to be doing the dentistry, that needs to be factored in and you looked at closely. Or maybe the insurance company paid more than we anticipated. There's a $50 here, $150 there. Pretty soon there's 8,000 to 10,000, maybe more in AR credits that need to be addressed before the time of sales. And doctors, when you're working with us on a practice acquisition, we'll make sure that that AR aging, because we generate an app that can tell us exactly where they are. So if you are in network with Delta Dental, I remember back in the late 80s and 90s, Delta was, developed by dentists, and we love Delta. Well, you know what? The fees have not changed in 25 years. Wages have gone up dramatically. Our overhead costs have gone up, wages, supplies, lab bills. So some of you may be considering dropping some of the PPOs, and it might be a good time to do it 2 to 3 years prior to selling, because then that buyer won't have to take that fee reduction and they're more confident on what they're going to be getting. And we do an assessment with our doctors about which PPOs are in the practice. So I have a riddle for you. Bill, maybe you've heard of this before. 5 frogs on a log, 4 decide to jump. How many are left? All right, I'll say it again. 5 frogs on a log, 4 decide to jump. Doctors are saying, Joanne, there's 1 left. 5 frogs on a log, 4 decide to jump. There's still 5 frogs on a log because they talked about it, they were going to do it, but they didn't do anything about it. So doctors, you've experienced and heard some great information today. please, please don't be a frog in a log. Let us help you go out there and do it, be successful, and create a great dental organization. All right, I'll open up the floor to some questions.
Well, Joanne, I love they're still there because they just didn't do anything. It's the sad thing is that, and I don't want to just put that on the dentists. That's people in general, right? That's people in
Right.
general. So don't think that, oh, don't be hard on yourself, but come to the realization that, you know, inertia is the hardest thing we need to overcome in business as well as in life. So great advice. Time to make some changes. But while Shannon was on doing her presentation, there was a question that came in, and it was about what type of entity, and it asked about should you incorporate? Should I incorporate when you're talking about the different entities?
Oh, that's a great question. And that's one of the questions that we most commonly see when people come to Thomas Dahl. And liability is one thing, and that's more of an attorney question, but we see that as a planning opportunity. Because a lot of times people jump right into incorporation, but we recommend that you hold off if you're going to be earning less than $200,000. So as a general rule of thumb, if you're married and you have a non-working spouse, you might be in a good spot to be a sole proprietor. If your spouse is working and is a high earner too, it might be better to be incorporated. So I'm going to simplify here, but if you have less than $200,000 of net income and you're a sole proprietor, you could be eligible for the qualified business income deduction, which means if you meet the income threshold and phase out, you get a 20% deduction on your business income. So this is a substantial benefit for being a sole prop. But if you were an S Corp and you're still earning around that same amount, you'd have to pay payroll taxes. So the net income to the corporation would be lower. So the deduction would be much less and you'd be paying more taxes. But on the other hand, there's benefits for being a corporation. So back in 2017, a tax law was passed that said we had to limit our state and real estate taxes to $10,000 on our federal tax return, right? So California and the federal government got together, they passed a law. It's only effective until 2026, but it's called AB 150, which is an election to pay a portion of your personal taxes as a business expense. So you still pay the same amount of taxes, but you can claim it as a business expense. Now, this is only for corporations, partnerships, and pass-through entities, and you're limited to a certain formula of whatever profits you have. But so that's why we say, like, if you're around $200,000 of income, you'll likely benefit more from the QBI deduction. And over that, you might consider incorporation to benefit from the AB 150, which is there's a short time left for that. So everyone's situation is different. There are certainly exceptions. The bottom line is you need to go through this analysis with one of our dental CPAs at Thomas Dahl. So they'll walk you through like QBI deduction, yes or no. If you incorporate, what would be your AB 150 tax savings? They'll also ask you, what do you expect your earnings to be in the next 5 to 10 years? Because if you're about to double your production, it might make sense to go ahead and incorporate now, because you don't want to have to re-credential every insurance provider with your new EIN if you make that change. So great question. Yeah, we have our rules of thumb about it, but bottom line, you need to talk to a dental CPA.
Oh, well, you know what? I've never heard of some of what you were just talking about, Shannon. And now it makes sense in terms of your income, your net income, and whether or not, one makes more sense than the other. But yeah, I never even would have occurred to me.
Yeah, good.
Yeah, great. Joanne, there was a question on yours when I saw this with when your slide came up about huddles. So the question was, how important are morning huddles? And I actually have a practice that used to do them, but doesn't do them anymore, right? They used to do them and now they don't. So what do you tell the practice that hasn't been doing them, or the practice that has been doing, used to do them, but stopped?
You want to get your practice back on track or get your practice to grow. Having a team meeting is important to making sure we're doing things correctly, that we're having time to check in with everyone because you're so busy every day to have that eye contact. If there was a success yesterday that you want to recognize, giving the team a high five because they filled that last minute opening. So having a team huddle in the morning. All right. I do have one client that they decided to do it the night before because they had a staggered morning shift. So we need to find the time to do that every day, plus a monthly team meeting, as well as a quarterly all team meeting, preferably off base, minimum a half a day in the office or an entire day outside the practice. Sometimes when it's at the office, we'll bring up a food truck at lunch and have some social time, but it's structured time to work on your business, not just in your business. And we can cultivate a better team when we have those effective daily and quarterly team meetings.
Joanne, you mentioned the offsite stuff or really getting, working on the business and not in it. That's so appropriate. We do that even in our marketing agency and such. It's you almost have to physically get out of there. Because even there's just the temptations in your mind being in that environment. You're waiting for the phone. When the phone rings and you can't answer it, it's like, it's an interruption, and it breaks up really the creativity that I think you want to get in problem solving. So I appreciate that. This last question that came up was actually on Delta Dental, and I think even Shannon mentioned, we're not saying you can't be a Delta Dental practice or whatnot. You just adapt to it, kind of thing. So this is a question on when do I determine to drop Delta Dental, and how do I start?
Well, let me take that, Bill. Let me tell them what not to do. We've had stories hearing from dentists, not our clients. They decided to drop it. They sent out a letter to their patients because we heard Delta was going to send out a letter, so we thought we'd get to them first. The problem is when you read a letter, emails, you don't have the compassion from the person. You don't truly understand what's going on. This conversation needs to happen knee to knee, eye to eye from the clinical team. Doctor, if you're not comfortable doing that, we train the team because that is at least a 6 to 7 month process. It sometimes takes even longer because doctors, if you want to drop Delta, we need to make sure that entire patient egg experience, yes, I said egg because it's fragile. We need to make sure from the time they walk in the door till they see the hygienist, they visit the doctor, and they do some restorative back to the front office, that entire patient is 5-star plus. It's not about the teeth, it's about the relationship, the patient's thing. So anyway, yes, we do an analysis to find out how many patients. Are the demographics right for your practice? Who are the employers that have the Delta or whatever PPO you're looking at? So good question, and we would start with analysis for that.
Super. Well, those are the questions that I've got. I would also encourage, if you do have questions, any future questions, Joanne and the rest of the team, Shannon, are available. Here is Shannon's phone number and email address. Feel free to reach out to her. Obviously, there was a lot of questions there. And then also reach out to Joanne Tanner. You can reach her. Oh, let me move that back. You can reach her at her phone number and at joanne@tannermanagement.com, or you can scan the contact information as you can on Shannon. So I hope you reach out to them. There's not a time when I do these management webinars with any one of these professionals where they don't bring a ton of good insights. So I hope you will reach out to them. And just as a little plug at the end, we do, as a digital marketing agency, much like Joanne and Shannon will do an assessment in terms of kind of where you guys are at. We do a similar thing with all of your digital marketing, your website, your Google business profile. And I will say there's a relatively new thing that dentists are not aware of on Google, and it's the local service ads. This is not pay per click, but this is pay per lead services. And you got to go through a credentialing service to get a Google badge to run these ads. So if you have questions on that, if you haven't been doing them, I think it's something that most practices, once they realize that that's available, they're like, oh, Eureka, I didn't know what those things were. So any case, we hope you found this presentation helpful, but feel free to reach out to any one of these two professionals and they can give you some really good guidance. Thank you again for joining us, everybody.
Thank you.
Thank you.